Okay, so this is the 2013 incomplete records question, and I'm going to do it in several parts. So the first item that we're asked to do is to create a trading profit and loss account for the year ended 31st of the 12th, 2012. And so I've just put in some of the headings because the format is going to be similar to this. Trading profit and loss account of E. Kelly is the person we're talking about here, E. Kelly, and for the year ended 31st of the 12th, 2012. So it's going to have this layout: sales less cost of sales, opening stock plus purchases minus closing stock, giving us our gross profit, and then less expenses, and eventually down here somewhere we'll have our net profit. We also may have other operating income, some gain to add in there, but in this particular question we won't have, but we may in other questions. So first thing to calculate then is the sales, and this is just one way of calculating the sales, and I'm going to do the calculations down here. So the sales are comprised of cash sales and credit sales. So we're going to calculate the cash sales first, and then we're going to calculate the credit sales and add them both together to give us our total sales figure. So for the cash sales, first of all, because the records are incomplete, they didn't calculate what the cash sales were or add them up. So we have to guess based on what cash came into the business during the year, and assume that the cash coming into the business during the year for the most part comes from cash sales. So our first cash payment that we made during the year was a lodgement of 94,000 into the bank. And so where did that cash come from? We're assuming from sales. So that's our first item we're going to write down here, 94,000. Next thing, we paid general expenses 22,500 from cash. Where did that cash come from? Cash sales again. Next thing was we made purchases of stock of 51,000, and where do we pay for those cash purchases? Again from cash sales, so 51,000. So there's those three first of all. Then also, if we look at the end of the year, it says we've got this cash left over of 550. Well, where did that cash come from? Again, must have come from cash sales. What we would watch out for in this case as well is, did we have any cash at the start of the year in our assets up here? Since we didn't, we don't have to do anything. If we had, we'd be subtracting that from our total amount of cash that we got in, because whatever cash you had at the start of the year may have been lodged or may have been used to pay these general expenses, etc. Okay, so that's some of the cash you got in during the year, or they got in during the year. There's a little bit more then. Down here, we can forget about where it says cash 94,000, because that's the same as this 94,000, the lodgement that went into the bank. But underneath it, it says Kelly took goods from stock to the value of 80 per week and took cash 60 per week. Well, again, where did that cash come from that Kelly took? It must have come from cash sales. So what we're going to do then is, with the calculator, we're going to work out how much cash is 60 euros per week for a year. So it's 60 multiplied by 52, which gives us 3,120. So that cash also will have to be added on here to make up our cash sales. So taking all of those together, then we add them up, total them, and again with the calculator, 3,120 plus 550 plus 51,000 plus 22,500 plus 94,000 gives me a total of 171,170. 171,170, and that's your cash sales. So cash sales. Then to work out your credit sales. So the credit sales for this year, we're going to be looking at debtors figures. So we have several debtors figures. We have these debtors at the start of the year, people who owed us money at the start of the year, but we assume that's for sales that were done last year. We have this debtors figure here, meaning that our debtors during the year paid us 32,000. We'll say transferred this money straight into our bank account. We presume this was for credit sales done during this year, and maybe paying off some of the bills from last year as well. And then at the very end of the year, it says we have debtors 16,600. So that's again money owed to us for credit sales that were done during this year. So if we start off with the money that was paid to us, the 32,000, so that was paid to us by debtors for credit sales. And then if we take it that some of that money paid to us was for those credit sales that we did last year, that were owed to us at the beginning of this year, this 14,000, then we're going to subtract that 14,000 from the 32,000 because we only want credit sales from this year. And then finally, if we take it that this debtors figure here at the end of the year, that's money still owed to us for credit sales that were done during this year. And that's not included in the 32,000 that we received because the money is still outstanding. So we add that 16,600 on here as well. So 32 minus 14 is 18, I would say. And this is 34,600. So that's our total credit sales. And then if we take our credit sales and add it to our cash sales down here, so 34,600, we get 770. And what's that? 205,770. And then we're going to put that up on top where we have sales up here.